Hey guys, welcome back to my channel CMA Future. This is my new video of financial accounting series number 4, in which we are going to study about capital expenditure, revenue expenditure. In the last video we had covered the difference between bookkeeping and accounting, financial accounting and management accounting. So today we are going to start with capital and revenue transactions. In this, we will see the concept of capital and revenue. It is very important to understand the concept of capital and revenue. Correct determination will show correct profit and loss. It will affect profit and loss account if we do not differentiate it properly, which is capital transaction and which is revenue transaction. So first we need to understand what is capital. Capital, explained by economist, capital is utilized in assets from where we bring capital, for what reason we use to purchase the assets. Then what we do, production, we do revenue, we get revenue from the production, again we further do the production. So in accounting, capital in business increases by portion of income which has not been consumed by the owners. See, sales happen, then revenue increases. Revenue increases, then from where? So sales happens, revenue increases. When revenue increases, then from the cost, whatever revenue is minused from the cost, whatever the revenue is deducted, what we get profit. Okay, now if the owner takes all the profits from the business, what remains? Nothing remains. Like suppose I'll give you an example. We have profit of 100 rupees and the owner takes rupees 50. What remains? 50 rupees remains in the business. Suppose if the owner takes full 100 rupees, then nothing will remain in the business. No profits will remain. Whatever remaining is profit. So if we don't have this profit, then we'll not able to do reproduction. We cannot do. Again we have to raise the capital. Again we have to find out the funders and so on. Okay, so if the owner takes some amount, then whatever the remaining balance is profit. From this profit, again we will purchase the assets, we will purchase the products, goods, then we'll start the production. Okay, next is relation between capital and revenue is like a tree and fruits. From the tree, fruit grows, fruit is consumed. Okay, from this tree fruit is produced and then we consume the fruit. So if we take properly care of this tree, okay, if we take proper care of this tree, then fruits will grow more. Instead of one fruit, we'll grow 5 fruits if we take care. But if we destroy this tree, then no fruits. These also nowhere. 0 fruits will be there. In the same way, if we take care of this, revenue is, this is capital, this is revenue. If you want revenue more, then you should take care of this capital. From where this revenue comes? Revenue comes from the capital. Revenue comes from the capital. So if we take good care about the properly about revenue capital, then we'll get revenue more. More revenue can give you new capital also. Who will invest capital? Capital invested by the person who needs revenue or income, owner of the business. Owner of the business needs income or revenue. So what he'll do? He'll do further investments. If our capital is taken care properly, if this is taken care properly, revenue increases. If revenue increases, further capital also increases. Okay. Capital can be brought through cash or kind. Okay. Capital can be increased in two ways. One, how it can be increased? In two ways. One, the owner brings it, new capital. The second one is owner does not consume any periodic income. Okay, like I said here, he does not consume the periodic income. When owner brings new capital, where we post it in capital account, or when net income produces or generates, we post in capital account, credit side. Okay, so when new capital is brought in, we post it in capital account, or if net income is generated, we post it in capital account, credit side. But when owner uses his from the capital, he uses for his personal use. Okay, what we say it? We say it as drawings. So this reduces the net income. Hence, we add it in capital account. So for example, I'll explain you. Suppose we have capital. This is an example. I have a capital of rupees 500, profit of rupees 200, drawings rupees 250. So drawings is more than the profit. Okay, here this is more. Suppose capital was rupees 500, profit was rupees 200, and drawings he made was rupees 150. So here 50 rupees, here 50 rupees is profit. It's still remaining. Okay, so what we do? Capital is how much? 500 plus 50 rupees profit is remaining. So how much is the capital? 550. I hope you have understood properly the concepts. Capital and revenue concepts have been clear to you all. Now we'll see revenue receipt and capital receipt. Okay, revenue and receipt has Revenue and capital receipts have differences. Revenue, which we sell goods or services through which we earn or receive income, is called revenue. Receipt matlab inflow of money. Even revenue received earns money includes in receipt. Leaving revenue receipts, other receipts also come under this. Not only revenue receipts, other receipts also comes under this. So now next is, what is capital expenditure? Capital expenditure is nothing but the outflow funds to acquire assets from which business is making benefit more than one accounting period. Account capital expenditure. I just write in next page. What is capital expenditure? Capital expenditure it is outflow of what? Of funds. Okay, for what reason? To acquire assets. For what reason? Making benefits of the business in more than one accounting period. This is very important. Not only this accounting period, we need to make profit for the next and next coming accounting years also. So this is very important in capital expenditure. In short, whatever expenditure on assets we do, which is not written off completely in one accounting period, those we call as capital expenditure. We saw properly what is capital expenditure. Okay, next is revenue expenditure. Next is revenue expenditure. Even this is the outflow of funds. Okay, this is also outflow of funds, but it is not to acquire assets. For what it is? For day to day running expenses to fulfill it is called, and from whatever from that we get benefit we receive in current period only. जो भी रेवेन्यू एक्सपेंडिचर होता है वो जो नॉर्मल कोर्स ऑफ बिजनेस में होता है, एंड टू मेंटेन द कैपिटल असेट्स वी यूटिलाइज इट, एंड दिस इज important in current period only happens. Okay, in capital expenditure, to buy capital assets also expenditure can be done, and to improvement of fixed assets also can be done. Okay, here to buying assets and improvement of assets, both can be done. See now, improvement done, what it will be? Capital expenditure. Okay, and if we maintain the assets, what it will be? Revenue expenditure. Okay, this is very important point. Please note down it. One more thing to remember is that for this asset, payment made is not compulsory. We can make exchange in another assets. एक्सपेंडिचर इनकर करने का एक्सपेंडिचर रिकग्नाइजेशन इज डिफरेंट फिनोमिनन. बाइंग एन एसेट इज कैपिटल and depreciation charged on that asset is revenue. Okay, now I'll write it here. What I said, buying asset is capital. Buying asset is a capital incurrence जो शो होता है बैलेंस शीट में, एंड depreciation on that asset is charged. What it will be? Revenue expenditure, where it will be shown in profit and loss account. Okay, these two are different phenomenon. What different phenomenon? एक्सपेंडिचर इंकर्ड करना और एक्सपेंडिचर रिकग्नाइज करना दो अलग अलग डिफरेंट रहता है. रेवेन्यू एक्सपेंडिचर चार्ज एज एक्सपेंसेस, कैपिटल एक्सपेंडिचर कैपिटलाइज्ड एडेड टू assets. Now we will see the difference between capital expenditure and revenue expenditure. Capital expenditure, revenue expenditure, difference between. The economic benefits of capital expenditure are enjoyed for more than one accounting period. Last time अभी just explain की थी मैंने. It is not only for one accounting period, from one next year further accounting periods it has been enjoyed. But in revenue expenditure within a particular accounting period, मतलब current accounting period में यूजफुल होता है, बेनिफिट होता है. कैपिटल एक्सपेंडिचर आर ऑफ नॉन रिकरिंग इन नेचर, मतलब असेट्स जब उसमें वी परचेज असेट्स, वी डोंट रिकरिंग, मतलब अगेन एंड अगेन वी डोंट गो टू परचेज इट. ओके, बट रेवेन्यू कैसा रहता है? रिकरिंग रहता है इन नेचर. एवरी ईयर इट ऑकर्स. सैलरी, वेजेस, traveling expenses, depreciation, everything will be recurring in nature. Expenses, revenue. All capital expenditure eventually become revenue expenditure like depreciation. मतलब assets हम show करते हैं, we show it, but in depreciation of assets is a revenue. So all capitals can become revenue, but that only revenue expenditure cannot be capital expenditure. Capital expenditure are not matched with the capital receipts. All revenue expenditures are matched with the revenue receipts. So this we will see revenue, what is capital receipts and revenue receipts in coming this. I'll explain it in now. So first you understood this capital expenditure and revenue expenditure, then we will see the receipts. Okay, I have just told in before this that all the receipts, revenue and receipts difference I said. So what I said, revenue is which we sell goods or services through which we earn or we receive the income, that is called revenue. Receipt मतलब क्या रहता है? Inflow of money रहता है. Okay, every or even revenue earned or received money includes some receipt. So that will be रेवेन्यू एक्सपेंडिचर होता तो रेवेन्यू रिसिट भी हो मैच होता है, बट दैट ओनली इन कैपिटल एक्सपेंडिचर it will not match with the capital receipts. Okay, some of the capital expenditure and revenue expenditure examples we will see. Capital expenditure means, first example is capital expenditure of shifting factory for easy supply of raw materials. मतलब अगर suppose in this area, suppose in one area we can receive raw materials easily, like suppose we receive tea in Assam or coffee in Tamil Nadu, Kerala states. So factory shifting to that area is good. You can't remove a factory in Rajasthan and say we will produce the tea powder here. Okay. Next is preliminary expenses incurred before the commencement of business. Whatever we are going to start the business, before that whatever small things like preparation of MOA, like for company I'm telling you, MOA, bond papers, expenses, any small expenses also incurs, that is all capital expenditure. Legal charges paid for drafting MOA, AOA, commission paid for rising capital. Okay, next one is revenue expenditures. What all revenue expenses will come? Salary, wages paid to employees, rents, rates, uh, taxes, depreciation of assets, inventories of raw materials, insurance premium, taxes we have paid, miscellaneous expenses. Okay, these all comes under capital revenue expenditure. Okay, next we are going to see replacement of fixed assets. Normally when we purchase fixed assets, then we say it is capital expenditure, but in this case rule of capital and revenue expenditure does not fulfill. So if we are going to replace the fixed assets with a similar kind of assets, and instead of capital expenditure we are going to treat it as revenue expenditure. Okay, now let's see what it is. Replacement of fixed assets. Suppose fixed asset is replaced with similar kind of assets, it is not going to be treated as capital expenditure, but it will be treated as revenue expenditure. For example, there is a machinery in a shop and it has become defective. We have replaced it with a similar machine. Then the replacement expenditure will be treated as revenue expenditure, and where it will be charged, where it will be charged in P&L account. But there is a twist in this. What is the twist? If the asset if asset is replaced, okay, it has been replaced only, but with superior asset, this is important, superior asset, then partially it will be called as capital and partially revenue. Okay, we'll see with an example. Example is that manual typewriter we had. First we had manual typewriter. Its cost was 5,000. Now we replaced it with electronic typewriter. How much is the cost? 10,000. So this, in this 5,000 it was manual, so we are going to treat it as revenue expenditure, and the remaining balance 10,000 we are going to keep it as capital expenditure. Okay, this is the twist in this. If we have similar kind asset replacement, then the whole thing is treated as revenue expenditure and charged to the P&L account. But if it is replaced with a superior asset, then partially capital, partially revenue. How I have explained you, the manual typewriter cost was 5,000. So whatever the previous asset will be there, that will be treated as revenue, and the remaining will be treated as capital. Means excess amount will be treated as capital. So next point is deferred revenue expenditure. Deferred revenue expenditure. We have seen revenue expenditure. What is revenue expenditure? For one period expenditure incurs, that is revenue expenditure. But what is deferred revenue expenditure? Deferred revenue expenditure incurs for long period. These expenses are carried forward and written off in future accounting period. इस year written off नहीं होते, what will happen? It will be in future accounting period. Written off carry forward होते हैं and then written off होते हैं. Sometimes when we make revenue expenditure, it becomes a capital asset, that is intangible nature का हो revenue expenditure किया तो उसको capital asset बोलते हैं. Okay. Next is preliminary expenses. Preliminary expenses क्या है? We don't show it in, where we don't show it in balance sheet. Why we don't show it in balance sheet? Preliminary expenses तो capital asset है, but why we don't show? We don't show as per para 56 of accounting standards 26. Okay, because of this reason we don't show. What is accounting standard 26, para number 56? We will see in the next class. Okay, I'll just google it and tell you, because even I don't know accounting standards. I have not learned all the accounting standards, whatever there is for intermediate, AS1, AS2, AS9, AS7, AS10. I have learned only that much. So tomorrow I will find out what is AS26 and para 56 says it. Okay, but we don't show preliminary expenses in the balance sheet. Where will show the preliminary expenses? Preliminary expenses will be shown in profit and loss account. Preliminary expenses is part of a revenue expenditure, so we show it in the profit and loss account. Similarly, scientific research recognized expenses. Okay, it is recognized expenses when it incurs. We treat it as expenses. Scientific research, we treat it as expenses of current year. Okay, and we don't treat it as deferred revenue expenditure. Okay, we treat it as expenses. Okay, today we are going to end this class here only. Next class we'll go to see capital and revenue receipts and difference between that. I've written here capital and revenue receipts, difference between, and we'll see types of accounts and everything in the next class. Thank you guys for watching this video. Please subscribe my channel, share it with your friends, and press the bell icon. Thank you. Bye bye.